All right, what's the point? More importantly, what's a point? When you're taking out a mortgage, you'll hear different terms. One of the most common terms and one of the biggest questions clients ask me are, what are your fees? Or more importantly, are you charging any points? When you're buying a home and you're financing, paying points can actually be a really great way to save some money. But it's important to note, not all points are the same. There's a difference. There are two different types of points, and you need to understand when one might be better than the other. So in today's video, we're going to talk about what is a point and when should you buy that point. All right, let's get one thing straight out of the gate. What's a point in the first place? A point is a percentage, and that's a percentage of your loan amount. So when you talk to a lender and they tell you that they're charging 1 point, that means they're charging 1% of your loan amount. For example, if you were borrowing $400,000, then that means you'd be paying 1%, which would be $4,000. Or if you were paying half a point, for example, then it'd be 0.5%. You'd be paying $2,000 and so on. So when you talk to a lender and they talk about charging points, just think of it in the terms of percentage. So there are two different types of points. There's what's known as an origination point, or an origination fee, as this can be called, or a discount point. They're both used for different reasons and to benefit different people in the transaction. So it's important to note when this is benefiting you versus when the other may just be benefiting your lender. An origination point is a charge that goes directly to the lender. In some cases, this may be used for qualifying purposes. You may pay an origination point for a certain type of product or for qualifying for a certain type of loan, in which case you just know up front that that cost is being paid directly to the lender. This is not something that's being paid necessarily for the benefit of a lower interest rate. This is more so for compensation. So an origination point is compensation to the lender. A discount point, on the other hand, is a direct cost of obtaining a lower interest rate. So you will pay a discount point to get a lower interest rate than what you would qualify without this fee. So for example, let's say that you have an interest rate at 7% and you pay 1 point or 1%. Now, it's not a science, or direct science, I should say, but on average, you could say that 1 point will get you about 0.25% on your interest rate. So 1 point buy down at 7% should get you down to about 6.75%. Now, when you're paying that discount point, this is not compensation for the loan officer. Instead, this is the actual cost of getting a lower interest rate. And that can have its benefits. In a high interest rate environment, especially like what we've seen recently, paying a discount point could help you obtain a lower interest rate that has a more manageable monthly payment. So then the question comes down to, when should you pay a point? I think the idea of paying a discount point to get a lower interest rate is really going to depend on the individual, right? It's your risk assessment, if you will. If you're paying a fee to get a lower interest rate, you're basically betting that interest rates will not come down below that percent, like below that level, let's say. So for example, let's say you pay 2 points to get you from 7% down to 6.5%. Well, in that scenario or that example, you're basically betting that interest rates will not come down at least far enough below 6.5% to where you would want to refinance. Because keep in mind, when you pay a point up front, it's non-refundable. You're not getting that money back. If you pay 2 points up front or 2% of your loan amount, again, using that example of a $400,000 loan amount, well, that's $8,000. If 6 months later rates drop and you refinance, well, you're not getting that money back. So it's going to depend on your philosophy and your outlook on the market. If you think rates are going to drop, paying points is not a good idea. However, on the flip side, maybe you don't even want to think about where interest rates are at. You like the payment at 6.5%, you'd like to set it and forget it. That's a really good example of when paying points can be a good idea. You're going to be able to get a monthly payment that you can manage, that you're comfortable with, and you don't have to worry about the movement of the market. I think it's important to note that both points, an origination point and a discount point, these are tax deductible. So there is an additional benefit. If you're paying points, or when it comes time to file your taxes, if your accountant wants to see a copy of your settlement statement, these are the costs they're looking for, because these are a tax deduction, which is an added benefit. At the end of the day, paying points can actually be a good thing. It just depends on your situation. As always, make sure you talk to a qualified mortgage professional so you can have a better understanding of what your options are. Does this make sense for you? Hopefully you found this information helpful. Please remember to like and subscribe and pay attention for more videos on how you can save money when you're buying a home.